All right, welcome to the Short Vol Show Live. My name is David, and I'm broadcasting live to you from Cape Cod, Massachusetts, home of the Pilgrims. And this episode, we will talk about the market in the rally of the last day and a half. Is that dip over with? Depends who you talk to. The answer coming up next. Also, I'm going to do something that I rarely do, but I'm going to do at the very end of the video. So, spoiler alert, if you want to click off at the end and not listen to me, I am going to discuss very briefly some politics. I know that people have different views, and I welcome different views. I welcome to be convinced, but I'm going to talk about politics just for a second. Okay, so the market has rallied the last 2 days. Let's take a look at the charts real quick. And to do that, I'm going to make sure that my picture is gone. So let's get rid of my picture. There we go. And let's pull up the charts. All right. As I said before, I'm working with one screen today, so bear with me. Here's UVXY, and we can see that it has, this is the year chart. Let's go to the 20-day for the action of the last 20 days. And we can see the spike. Spike started like 2 weeks ago, maybe. Yeah, it was like last Friday. 2 Fridays ago, it kind of started, and it looks like we're back to where we were then. So the spike has come. It's receded a bit. Will we now go on to make new lows again in UVXY? Well, I'm not sure. What I am sure of is that this does help my position because I have been short the whole time. I need UVXY to be at $33 or below on expiration of June, which is in 30-something days, like 38 days, something like that. I'm long the June 35-33 put vertical. Now, we know that the VIX is a derivative product, and it depends what happens to the general market. When we have the market rallying, VIX tends to come in, and when we have a sell-off, VIX tends to pop. If we look at the general market, I'll go to the E-mini chart here. We can see the action for the last few days, and we can see us kind of coming back here. Now, things could turn around again. It wouldn't be surprising if things turned around and went back down now. We would say that we're in this sort of downward channel here. And but we have kind of broken out of the several days of down action to have a couple days of up action here. So that is why the VIX is subsiding, and as the market rallies. There's been a whole lot of news, and I saw somebody come on, when was it? 2 days ago, probably. Let me get my face back up there for a second. I saw someone come online like 2 days ago, and they said, how in the world could we make new highs with X? I think they said with the tariffs, and they listed a couple current events, and they said it's impossible. There's no way we can make new highs with this, and that happening. And when you look at some events that are happening in the world, and then you discuss the market based on those events, people call that fundamental analysis. The fundamentals of the market would be like, well, the economy is doing well. We finished a war. We're about to start a war with Iran. Those kind of things are market fundamentals. Market technicals would be pulling up a chart and saying, okay, well, we've got a head and shoulders pattern, or the VWAP, we're above the VWAP right now in the day, or the RSI is up or down. Those would be technical, looking at the market from a technical perspective. A fundamental perspective, like I said, is like talking about like, well, the president did this, the president created jobs, and thus the market is definitely going to go higher. That's fundamental analysis. And, there's different ways of looking at the market. More and more people are starting to look at the market by analyzing the VIX, which I find interesting. I was watching a YouTube channel that was doing that today. Let me pull it up because it's interesting. It's not a VIX person, but it's somebody who's trying to figure out how to use the VIX to trade. So let's find that here. And I'm not like insulting this person.
Further market drops, and
this is called Trading Options Live. And maybe check out this video of his. I can leave a link in the description. It is interesting. He's like highlighting different levels of the VIX and using those as sort of indicators. So, for example, he said, well, we sold off a couple days ago and the VIX went to 23, and then a more recent sell-off, the VIX only went to 20. So that means that it's less dangerous of a sell-off because the VIX didn't go up as much. So, seeing that the VIX didn't respond as much to the second daily sell-off, I bought calls on the market, and I bought these calls, and the market did indeed go up. Now, when you say something like, I saw this happen, so I bought calls and the market goes up. Is there really a relationship between what you saw and the market going up? Well, the answer is maybe. It's hard to tell, right? You could say, well, I saw a black cat cross my path today, so I shorted the market and it went down. Now, is the black cat crossing your path what caused the market to go down? And most people would say no. But if you change the black cat with, well, the VIX popped a whole lot earlier today, and so I shorted the market and it went down, then all of a sudden it seems like, well, that was a good play because I used that indicator and it turned out to be true. So what I'm saying is, just because something turns out to be true doesn't mean that that's actually what's happening. There's a whole lot of people who get long the market during bull markets, and they pick whatever stock on a dartboard, and the stock goes up. And some people will think of themselves as geniuses because of that. But what's actually happening is that everybody's making money being long in a bull market. But I do commend this individual for looking into the VIX and making some analysis here. What I do want to caution people, not as much at looking at a VIX chart like this one that's up behind me, but when looking at a chart like a UVXY or a TVIX or a VXX chart, I would caution people against using fundamental analysis. And this is because all these VIX ETPs they're not stocks. They're not based on supply and demand of the actual ETF. They're based on an averaging of two futures, and the two futures are in relationship to each other in different ways. To figure out the relationship between the two futures, we use the VIX term structure, which is pictured here. And people who are using fundamental analysis to try to pick, saying like, oh, there's support here, there's resistance here, are not considering the shape of the term structure when they look at those charts. And so it's not as useful if you have one stock that's supply and demand, like let's say, I don't know, Ford Motor Company, and there's a lot of people offering the stock at a certain price, then supply and demand comes into play, and support and resistance and all these other charting things, make a little bit more sense. I would argue against them in that case as well, but they make a little bit more sense than when you're dealing with UVXY or VXX, where you're slowly moving downhill all the time, even when nothing's really going on. So I caution against using technical analysis with UVXY or VXX. I wouldn't do it at all. When I see people doing it, saying, well, there's support here, resistance there, I feel like they are missing the point to some extent. Now, this guy here is using some sort of technical analysis on the actual VIX itself. Now, remember, we can't trade the VIX itself, but that doesn't mean there can't be something gained by looking at the chart of it, of course. And when he says, well, 16 is an important level on the VIX, I kind of question that. Okay, and I'll show you why. Let's look at a chart of the VIX for the last 3 years. Okay, and that is actually not it at all. Let me just make sure I am not in the way here once again. And no, I'm not. So here's a chart of the VIX for the last 3 years. Okay. So let's draw a line at 16. So 16 is like right around here. Okay. Now, why is that point of 16? Does that seem more significant than any other part? It doesn't to me on that chart. It looks like just as significant a spot as 16 and a half or 20. You know, I can see kind of a line here, maybe around like 10. You see how it's been at 10 a lot. I can see maybe a line around like maybe 12 here, but 16 doesn't. There's no supply and demand for this because it's not a traded product. Okay, so trying to come up with a pivot point for it doesn't make any sense for me. This starts rolling in one direction, it keeps rolling, and where it pivots back and forth has to do with supply and demand for puts in the SPX. And saying that 16 is somehow significant doesn't make any sense to me. It doesn't appear on this chart to be somewhat significant. And even if you had a lot happening around 16, I guess if you kept seeing it bouncing off of 16, then even though I wouldn't understand why that would be the case, you could attach some significance to it. But it just doesn't seem like there's any reason why 16 should be important, other than that it bounced off of there once last week or something. Let's go to the 20-day and see if we can. All right, so if we look at the 20-day, we can see that, all right, it got up to 16 at one point on 5/2, then it blew right through there, but it kind of bounced off of 15 a couple days later, then it got down to 15 and a half and bounced off that again a couple days later. So maybe he's referring to that one or two times in the last couple weeks that it's gotten near 16. But I don't see that as being an important point, and it seems like to me that it's just kind of like a coincidence that it bounced off 16, those 3 points, because if we were to widen this out to a year, okay, you could just argue as much for 18 as 16 as a bounce off point. I mean, it seems very arbitrary. So, like I said, I commend people for looking more at the VIX, but I think they're missing the point. The point for me is getting into the term structure. So let's go do that. Okay, so here's the term structure right now. We see that the futures are in contango by almost 6%. So with with UVXY 35, if we multiply that by 5%, we get, multiply by 5%, we get 1.75. What that means is that this thing is decaying by 1.75 points per month. So if you wanted to do some sort of technical analysis on it, and if it was going to stay exactly in contango from now on forward, you could kind of rotate the chart maybe by a couple degrees to get that downward slope into your charts. If you were to move the right side up on the chart a little bit and the left side down, that would basically compensate for contango, and maybe the chart could be slightly more meaningful to you. But in the absence of having any sort of calculation for contango or backwardation, you are basically looking at a chart that is sideways when you're doing this technical analysis stuff, which is why it doesn't work. Is what it comes down to in the end. All right, so UVXY down $2 and change. It has rallied a little bit since I started talking, and I'm kind of wondering if maybe I should not cover a little bit of my position here. That way, if it goes back up again, I can put my position back on, and I've at least locked in some profitability at this level. And so what would I do? I'm long the June 35-33 put spread. So what would I do to hedge my position here? Well, I need to get some long deltas. So I could either just sell out some of my put spreads, but maybe a better idea would be to sell some farther out of the money put spreads. That way, if it does ending up below 30, if it does end up below 33 on expiration and above the price of whatever puts I sold, then that's just extra money in my pocket. So I would not only be not giving up the opportunity to make more money when I go down, I would be actually adding to the opportunity to make more money if I sell out of the money put spreads against the position I already have here. So let me look. I keep having to remind myself if I'm on the screen or not. I'm going to come back on the screen here. Here we go. So let me look and see which strike I would like to sell. Once again, I'm long 29 of these put spreads, the 35, 33. So what if I were to sell something like the 28, 26 put spread against it a couple times? That would be effectively taking $43 off the table for each spread I sell. And then if things go back up again, I could buy the spread in for cheaper. Or if things continue to go down, as long as it doesn't get below 28, I'm actually adding money to my potential. But instead of having potential everywhere from 33 down below, I kind of have to hit it in between 33 and 28 for the maximum potential if I sell the 28, 26 put spread. But the great thing about selling something when you've gotten a couple days down move and taking some money off the table is it allows you to reload if we get a pop again. But it's a question of what to do. Do you want to take your position off or do you want to leave it on? We just mentioned that there's $1.75 into K per month. We've got 36 days left, so nothing changes at all, and it just stays right. If volatility stays exactly right here, this will be down $1.75 in a month, which would make this so $1.75 would be it would be $34.50 in the end, $34.50. So ultimately, this put spread would end up being worth 50 cents. So it would be a loser for me if all things remain the same for expiration. By expiration, this position would be a loser for me because right now it's worth. This put spread is worth $1.13, something like that. And if this were to go out at 34.5, the put spread would only be worth 50 cents. So it would be ultimately a loser to me. However, there is a good chance that volatility does come in more from here and it becomes a winner. So it's all a question: do I take money off the table now, or do I just let it ride, continue to let it ride, and let your winner ride, because it's been a winner the last 2 days. Maybe I just do something small. And the other thing I could do is go and look at farther out of the money puts that are just really unlikely that anything is ever going to happen. So, for example, take the 26, sell the 26-24 spread. It's very unlikely that we're going to get down that low. But the problem with that is I'm selling the spread that could be worth $2 for only 20 cents. So that is, you're paying 2 cents commission for each spread you put on. So then that means I'm selling it for 18 cents. If I were able to buy it back lower, I'd have to pay another 2 cents to buy it back lower. So that becomes almost useless. Now, it would be great if this moved a lot lower and I could sell that same put spread for 50 cents. Once this, after this had moved lower by a couple bucks. But right here, I don't really want to give up that downside for 20 cents. What if we look at the 29? If we sold the 29-27 spread, that only gives us $4. It's like a pretty narrow bullseye, 36 days from now, or 38 days, whichever it is, to get in between that $5 range is kind of tough. However, that does, as opposed to just selling out some of my put spreads, selling the 29 one for a little bit less and giving me the chance, still keeping that chance to make maximum profitability plus is an interesting proposition. So let's sell just small this 29-27 spread for 52 cents, and we'll tempt this to, move lower, and to burn me to the downside. What if we just sell 5 of these spreads for $250, and we'll say, do your best to go lower, because we'll still make money if this goes down from here. And we can buy these spreads back if we get a pop. What if we could buy the spread back for 20 cents? I don't think anybody's going to sell us the spread for less than like 10, 15 cents. I certainly wouldn't sell it to anyone for less than that. But if we could sell this for maybe 60 cents and buy it back for 30, then we make 300 bucks. This pops one day, and the next month we make 300 bucks, put it in our pocket. It doesn't sound like too bad of a deal to me. And this is probably going to get another pop in the next month. We'll get another pop, I would think. So what do you think about that trade? Let's just do it. What if we just did it 5 times? All right. I'm gonna do nothing for now, and I'm gonna think about that. But we can think about that trade together. Let's talk about a few more different stocks in the market here. Let's talk about. Let's look at ACB. Okay, ACB. Interesting price action yesterday on earnings. It went down, but then it rallied off of there and actually is higher than it was before. Look at this chart for a couple days on ACB. Very interesting price action. I'm sure there are some people who puked out their position on bad earnings and then were frustrated because it went right back up. Look at this. Earnings comes out, trades down to 782, and now it's all the way back up to 887. Now, my history with this stock was just kind of buying and selling it right around 9 a bunch of times, and I kind of panicked and gave up on it and was happy I did because it went way lower, but now it's kind of back, performing better than some of these other MJ stocks. If we quickly go through them, CGC has been down the last few sessions. Tilray has been famously just grinding lower. Let's look at Afria. Afria kind of doing nothing. I've lost faith on that one. This one that I did buy a little bit of, T-God F, really, I paid around $3 for it a few days ago. It really has done nothing, going lower a little bit. So not great shakes from the MJs. And let's look at Tesla, though, because this is interesting to me. Tesla, it hasn't bounced. It seems like it always bounces every time. It hasn't bounced this time. Is this going to be a continuing downtrend for Tesla for a while? Well, we'll just have to wait and see. But definitely watching that Tesla myself. I think it's always been a fascinating monster of a stock to trade, and still watching it. Phunware, we've talked about Phunware a lot. Got up to $550. Now to $7. I gave up when it was around 5 and change. I was up money. I bought it, sold it for a profit, then bought it and sold it for a loss. So I'm probably like flat on this one overall. And $7 right now. But the thing is more shares are coming on the market soon. We don't know exactly when. Somebody probably out there does, but I don't know exactly when. But it's going to get diluted a lot more soon. So staying away from that one. Uber. Uber, the IPO here, it said it's fared, seems relatively okay lately, up to 43. Let's look at Lyft. Lyft also, to the highs since the IPO. So people that hung in there, actually, that's not right. What am I saying? It's not to the highs. It IPO'd, I guess, at 72. I guess my chart's wrong here. Hold on. All right, so IPO'd, I thought it IPO'd 75, but traded up to 88.60 on its IPO day. It's back to 56. So, sorry, I'm talking sideways on that one. So that one, not so great. The company famously loses money for every ride right now, and I fear that my buddies who work as drivers for them, they're going to be squeezed as far as how much money they're able to make per ride. As this company tries to figure out a way to be profitable. All right. So I said I was going to talk about politics for a second. So if you don't want to listen, sign off now. And all I really wanted to say was that I really think that as far as the next election, the 2020 election, that at this moment it really is, and this is not going to be any brilliant this is not, you're not going to think this is some brilliant revelation from me or going against the grain, but I think that Trump has it in the bag. It's his to lose at this point. There's all these contenders for the Democrats. I personally think that the only person that has a chance would be Bernie Sanders if he's able to orchestrate some sort of revolution and convince people that he can fix health care. But I know a lot of people are afraid of his quote unquote socialist views, and I know that the Republicans try to paint socialism as this like Bolshevik, like the CCCP and the Russians are coming to get you from your house, and I don't think of it that way. I think that there's a social contract between the population and the government, and you give up some freedoms and some things as part of this contract, for example, so that you'll have lights on your streets, so that you can have safe borders, so that you can have, and all of these things are in somewhat socialist type ideas. Having the police force is socialism in a sense, that you all pay in so that you can have a police force. These things are on a sliding scale, and the trick to say, oh, socialism, that remember back like in World War II, and the communists and all that, and both sides try to do it. The Democrats try to say, oh, fascism, remember World War II, fascism, that's Donald Trump, and the Republicans say, oh, remember socialism, oh, that's Bernie Sanders. So I heard this thing on NPR today. It was saying, well, the Republican Party is the party of the people, and et cetera, et cetera. And, I tend to be very cynical and think that both parties are the parties of the rich and powerful, because poor people don't have time to worry their heads about politics very much. They're hand to mouth. And this is nothing new, that politics has been run by rich people. It was true in the time of George Washington. So, like I said, nothing really groundbreaking for me saying right there, but I know people have strong views, and I don't want to get in the way of your views. I'm very proud of the fact that there are conservatives and liberals, and people who consider themselves conservatives and liberals, who follow me, and I am, I am open to people's ideas, and I want to have a dialogue. I'm very proud of the fact that I have friends from both sides of the aisle, and that that we can hopefully have a dialogue, because this country has become so polarized, with one side not talking to another, and I want to be a force to bring people together, not to split them apart, through education and through shared ideas. All right, so that's my rant for the moment. Not much of a rant, I have to say. So the VIX down, positions going my way right now, which I'm happy for. I hope things have gone okay for you. There's been opportunities on the long side and the short side here recently, and I think that will continue to be the case. The best thing that could happen to me is that we do get continuation of the down move in the VIX. But as I said, I'm considering sort of hedging myself here. Always keep some bullets, so that when you do get that outsized move one way or another, you can either increase your position or initiate a position to take advantage. All right, so there you go. There you have it. We'll see what happens next. It's very exciting. I just watched the penultimate episode of Game of Thrones with my folks, and the final episode this week. And I don't know if you're a Game of Thrones fan or not, but it's very sad having the show end, because it's been a big part of my life for a while now. I don't know what those guys there's so many people on YouTube who have YouTube channels that are just based on Game of Thrones. It really is a cottage industry, and I see them churning out videos almost every day now, trying to milk as much as they can out of it before it's gone, because I don't know what some of these people are going to do once Game of Thrones is over. They're so specialized, and so and you see so many people upset that the show's over, that a lot of people turn and blame the show. They say, "Oh, this episode's awful." They didn't expect what happens in an episode isn't what they expected, and so they say, "Well, the show got it wrong. I was right." And I think that's it's interesting psychologically because it's like detachment. They have to detach from the show, and so they do so by saying, "Oh, well, these episodes aren't good anymore." Anyway, so it's a good thing it's ending, something like that. Okay, so we'll see what happens tomorrow. I think I will have time to join you again tomorrow. Thank you so much for the new subscribers that have come in. Please consider helping me on Patreon. I need a couple more Patreon supporters to keep things going. And check out Gorilla Trades. I'm going to be switching how I interact with Gorilla Trades coming up. They are a great place for ideas on which stocks to play and get long. I'm not good at picking stocks, but they are. Thank you for all current Patreon subscribers. Check out the link in the description and give like $5 a month to Patreon to support this channel so that we can grow. We depend on your support. I am no longer advertiser funded, so I depend on your support completely to keep this channel going. I mean, there are some ads that run, and so I do have a Google thing with Google, but I depend on your support to keep this channel going. I've got these great ideas, but a lot of them cost money to do with a film crew, so or at least some people helping me out. So if you can give $1 or $2 or $5 a month, that would be awesome. I know a lot of people have made some decent money in the market, so cough some of it up for the channel. Support independent media, and I'll see you soon. Thanks for watching. Bye now.